in Shanghai. Now, gold has been trading as much as over $100 an ounce higher in Shanghai than it has on the LBMA and it has on COMEX. Slowly, methodically, little by little, turning up the heat, arbitraging all of the gold and silver that isn't nailed down. And so I think the bottom line is, look, from a technical standpoint, $2,000 was the resistance that could never be broken. Now it seems to be the floor. So I would expect things or the market to do well for gold here in 2024.
Andy Schectman, president and owner of Miles Franklin, has identified a significant shift in the gold market dynamics. What was previously considered a resistance level of $2,000 now appears to be evolving into a sturdy support level for gold. This transition is evident amidst the fluctuating trends in gold prices, with the metal currently hovering around $2,040 after a slight retreat from its recent peak of nearly $2,060. This fluctuating behavior in the market can be attributed to the mixed economic data emerging from the US. While the labor market showcases robustness, the service sector's weakness contributes to the volatility in gold prices. Despite these fluctuations, analysts remain optimistic about gold's performance in early 2024. The metal seems to be consolidating at elevated levels, maintaining a steady position between $2,000 and $2,050 per ounce. Surprisingly, gold has demonstrated resilience despite facing 11 consecutive interest rate increases. This contrasts with the earlier belief that higher interest rates might disrupt its upward momentum. Andy suggests that gold's performance challenges this theory. Philip Streibel, chief market strategist at Blue Line Futures, shares this sentiment, hinting that a March rate cut could further bolster gold, possibly keeping it above the $2,000 mark. Nonetheless, there's a cautious stance regarding whether enough momentum exists to push prices beyond $2,050 per ounce firmly. Andy highlights a notable trend in the global gold trade: the surprising lack of attention towards gold's recent all-time highs on platforms such as GLD and the London Metals Exchange. Recent data on January 2, 2024, revealed that the China Shanghai gold benchmark price rose to 482.370 renminbi per gram from 480.930 renminbi per gram on December 29, 2023. This strategic move challenges traditional price-setting mechanisms. Western exchanges control through global gold and silver price arbitrage. We will present clips from Andy Schectman's interview with Kitco News. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Gold held up very well in the face of rising interest rates. And you can say what you want about the real interest rates and say what you want about the changing of the metrics by which we gauge interest rates. And I always tell people, go to John Williams' shadow stats. He'll tell you interest rate or inflation's at 10%. So, but let's just take the Fed at their word and say that, you know, for the first time in a long time, that theory of real interest rates completely and totally derailing the gold rally was wrong. It held up incredibly well in the face of 11 straight increases in interest rates. And I think that when you realize that not only the most well-funded, but the most well-informed traders on the globe have been buying gold hand over fist for the last 2 years, it's very compelling. And when you take a look at what's going on right now, well, and two more things really. One being, yeah, you're right, it did hit all-time highs on GLD. It did hit all-time highs on the London Metals Exchange, and yet it's completely zero hype globally about it, or at least in North America about it. Why is that? That doesn't make sense to me. I do believe that this year there will be an inflection point, or soon anyway, that the mainstream starts to realize what gold is and the virtues of it. Maybe it has to do with the bank bail-in, which most people don't even know what the hell that is, but it was written into law in the Dodd-Frank Act. But here's something that a lot of people aren't talking about, and I think it should be. And that is that if we go back to the 27th of December, just a few days ago, and I don't have what it was on gold, but I do have what it was on silver, but I can give you anecdotal evidence on gold. And that is the closing price of silver on the 27th on the Shanghai Gold Exchange, the Shanghai Metals Exchange, Gold Exchange, was $26.50 an ounce. And on the CME or the LBMA, it was $24.31. It's 10% higher in Shanghai. Now, gold has been trading as much as over $100 an ounce higher in Shanghai than it has on the LBMA and it has on COMEX. slowly, methodically, little by little, turning up the heat, arbitraging all of the gold and silver that isn't nailed down. And so I think the bottom line is, look, from a technical standpoint, $2,000 was the resistance that could never be broken. Now it seems to be the floor. So I would expect things or the market to do well for gold here in 2024. But I think when people make predictions in a time frame, and Mr. Rickards, who I respect tremendously, I think he paid the price for doing that. I would just simply look at the macro and say, yeah, the chances of it happening, whether it be this year or next or the year after, is the probabilities are huge. What happened today, and look at how the minute, right, of course, the day that there's, a Fed meeting, the minute it closed in Asia, and it was on the upswing in Asia, the minute it hit the corrupt AM and PM fix in London, bang, it just collapses. It hits COMEX open, bang, it collapses even more. What I'm getting at here is that the West controlling the metals price, where in a market right now, in terms of silver, it is rehypothecated 1,500%. There's 1,500% more paper contracts than there are bars backing. That's what the Hunt brothers noticed. And I think the legitimacy of an exchange that can price oil at -40 a barrel, or can smash the price of silver like that, where a levered futures market, the tail wagging the dog, controls the ultimate commodity price, is something that these countries right now deeply resent, but they're not bitching about it because they're the ones buying it all. And it is the price setting mechanism of the world for now.
Several countries are embracing central bank digital currencies, CBDCs. China is trialing a prototype yuan with 200 million users, while India gears up for a pilot. About 130 nations, constituting 98% of the global economy, are exploring digital currencies. Concurrently, Russia is on the verge of commencing tests for its digital ruble, a CBDC, within a few weeks. Andy emphasizes the potential for a CBDC system, pointing to Russia as a possible model. This system could use blockchain to link a fraction of each currency unit to gold. This speculation resonates with Russia's recent strides, as its central bank aims to introduce a digital ruble nationwide by 2025. This move signifies the bank's strategic push to modernize Russia's payment infrastructure while maintaining traditional cash systems. In a report discussed during a previous interview in Vancouver, Georgieva contemplated the evolving role of gold. She acknowledged that central bank digital currencies hold the potential to replace cash, although she emphasized that their widespread adoption might take some time. Let's get back to the interview.
Kristalina Georgieva, the head of the IMF, in the report they wrote right around the time that you and I had our interview in Vancouver, gold a barbarous relic, or gold an international reserve currency, barbarous relic no more, something to that extent. And then she came out a few months ago and said any central bank digital currency not pegged to something is fiat. Well, what would it be pegged to? And when you talk about could this happen in October in Russia? Sure, it could, absolutely. And I think the way that they would do it, because see, President de Gaulle, who drained a good portion of the gold from our treasury in 1970, 1971, proved that convertible currencies convert. So what blockchain does is allow the immutability and the veracity of which each country pegs to be there without having it convertible. In other words, maybe you peg 10% or 20% of each currency unit to gold held on the blockchain and audited by independent international auditors. You can do that if you are open and transparent and do it the right way. You still have the ability to transact monetary policy because it's not a one-to-one, but a small percentage, but just enough to tether it, because given the choice, politicians will do what all politicians have done forever. Even going back to Roman times when they clipped the coins. That's why there are ridges on the side of gold coins, because they would clip it and make it just a little bit smaller. You do that enough, you have enough to make more coins. Well, going back to the beginning of money, politicians will choose inflation over austerity. So yeah, I think this is how you give it credibility in a system that I believe has already lost a good amount of credibility, in fact, and is losing it rapidly across the globe. So yes, the marriage of blockchain and the marriage of commodities together inspires confidence. And that's why when people say, who's going to trust? Well, you don't have to. If you do it the right way and have it audited, have it transparent, and everyone pledges the same thing to the distributed ledger, to the blockchain, you got a real fighting chance. And you asked me when we were in Vancouver, well, what could the West do? And I brought up Kristalina Georgieva's report. And at that point, she hadn't made the comment. But now she has. And she said a CBDC not pegged to something is fiat. Well, how does the West maybe stop this? How does the West maybe pull up from this nosedive? Do that. Get some legitimacy and credibility back into this system. One that is lacking it and is lacking trust. And indeed, I mean, you talk cryptocurrency again. It's about confidence. If you have no confidence in whatever it may be, then you're waiting for a rug pull. You're waiting for something to collapse. And I think no one will drink the Kool-Aid ever again the next time around, unless it is pegged to something with transparency. Zoltan Pozar calls this Bretton Woods 3, a system that will be dominated by commodities and transparency. This is the way to do it without having it convertible immediately by anyone who walks into a bank like they could do back here when this $20 gold certificate was the same thing as a $20 coin. And it's funny because now it says in God we trust, but back then, before 33, it says payable to the bearer on demand in gold coin. So it used to be one-to-one conversion. I don't think you'll see that again. But what gold will do when it marries with blockchain is to show exactly what every country has in the union, pegged to the system, giving them equal say at the table, and using blockchain technology to show the immutability of it. I think it is what they're thinking. But I guess only time will tell now, Michelle, and I guess we'll have to see.
Gold appears to achieve record highs in 2024, surging by 13% in 2023. This climb is propelled by accommodating US rates, global geopolitical tensions, and increased purchases by central banks. Meanwhile, silver is anticipated to hit $26 per ounce, primarily driven by growing industrial demand. Will $2,000 continue to serve as a strong support level for gold? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.